All right, welcome back everybody to Altcoin Daily, where you subscribe because you're interested in making money with cryptocurrency, and this channel keeps you informed. My name's Austin. In today's video, I want to share with you some very revealing Bitcoin charts, as well as the latest altcoin news that you should know happening in our space today. Like always, check the timestamps down below in the video description, and let's start by checking back in with the Grayscale Bitcoin Trust GBTC. You see, as of today, the GBTC is still trading at a 14% discount compared to the NAV, the native assets value. So as a reminder, GBTC is a way for Wall Street investors to gain exposure to Bitcoin indirectly. Grayscale buys the Bitcoin, they keep it in their trust, and then Wall Street investors who don't really want to have to deal with management or custody of Bitcoin can buy shares in that trust. And GBTC continuing to trade at this much of a discount, despite Bitcoin's recent dip under $30,000, is bearish. This is telling us that if the average Wall Street investor isn't interested in buying Bitcoin with an over 14% discount through the trust, then they're probably not interested in paying full price right now and buying Bitcoin on the open spot market. And this has nothing to do with Bitcoin's long-term fundamentals, but in the short term, how much lower do you think Bitcoin has to go before Wall Street is interested again? What do you think? Well, to put this negative 14% into perspective, here is the discount or premium to the native asset values range in the past 5 years. So the minimum that we have ever seen that premium is a negative 21.23%, and that was only a couple months ago. So that actually is a positive sign. We are on the up and up, we are headed in the right direction, and if that was the minimum, we can see that the maximum was actually in late May of 2017 with a premium of over 132%. That's the most we've ever seen. We almost got to 50%, we got to about 40%, at the very end of last year, the beginning of this run up from 20K to 60K. And if we take the average, the mean of this premium discount in the last 5 years, usually it trades above. Usually on average, it trades at a premium of 32.28%. Interesting. So what does this mean to you as a Bitcoin investor? And keep in mind, I'm not sure if this GBTC premium discount is a leading indicator or a lagging indicator, but this will be a very revealing indicator once this flips positive again. This will be confirmation that demand from Wall Street is back. Give me your thoughts down below about how much credence you put in to the GBTC premium discount. I will keep tabs on this, and the minute anything changes, I will let you know. Now that gives us some insight into the lack of buying pressure we're seeing from Wall Street. But our next question is, who is providing the selling pressure? And to answer that, let's take a closer look into Bitcoin's realized market cap. The Bitcoin realized cap tracks the aggregated value of all coins at the price when they last moved. And a lot of people say that using realized cap compared to market cap is a more accurate way to determine the value of the Bitcoin network. It rises when coins are spent at a net profit, and it declines when coins are spent at a loss. Since mid-May, the market has absorbed over $15 billion in net losses. Interesting. That means that investors that have been providing this sell pressure have primarily been selling at a loss. That means they are primarily newer investors, at least in the relative sense, that have probably got into Bitcoin somewhere in the last 4 to 6 months. If you're asking who's selling, this is it. And of course, the longer-term investors are buying their bags. We've been showing you charts like this for a while now. Coins are moving to stronger hands. There was a blip, but we're back on track. And what this means, short-term price action doesn't invalidate broader trends. Price can diverge from underlying investor behavior, just as it has for the last few weeks, but not forever. Against popular belief, I see a supply squeeze in play and continuation of the Bitcoin bull market. Very bold statement. Again, give me your thoughts down below in the video comment section. Nobody knows what the price of Bitcoin will do in the short term, so you do your own research, make your own decisions, but I will keep searching for the data and I will keep you updated. Let's keep moving and get to the most recent altcoin news. Chainlink onboards an average of 1.4 new partners each day in 2021. That means they're onboarding new partners twice as fast this year compared to last year in 2020. A very bullish indicator. According to the archives of Chainlink's ecosystem portal, 281 different crypto projects have announced integrations during 2021 so far, with the calendar currently 201 days into the year. And how does 281 different crypto projects this year with Chainlink compare? With the all-time third-party Chainlink integrations currently totaling 650, that means 43% of the project's partners were onboarded this year. By contrast, roughly 250 partners integrated with Chainlink during all of 2020. And what this means to you, if you hold Chainlink, is this is a very bullish sign. And one of the big reasons people are choosing Chainlink is because some of the products and services Chainlink provides. An increasing number of projects are also utilizing Chainlink's verifiable random function, VRF, which offers decentralized applications a secure and automated solution for generating randomness. And for example, we have just seen this with PancakeSwap. PancakeSwap integrates Chainlink's random number generator for their lottery feature to assure the lottery players that all have an equal opportunity of winning. And that's what you want. You want verifiable assurance that everything's fair. PancakeSwap, the automated market maker and yield farm platform built on BSC, today announced its mainnet integration with the Chainlink verifiable random function, VRF. And Chainlink's VRF will provide a provably fair source of randomness used to select winners in PancakeSwap's Lottery version 2 application, along with a supporting cryptographic proof that verifies the RNG process as tamper-proof. Now, me personally, I don't gamble. I'm not participating because I know I'd lose my money, but I found this quote from the PancakeSwap team very interesting. The new lottery has already become hugely popular, with the largest prize pool to date totaling over $1.1 million in cake. Given the value at stake, it's very important to bring transparency and security to the winner selection process so no single party could unfairly influence the results. And that is why they selected Chainlink's VRF for PancakeSwap. Pretty interesting. Next piece of news for gaming altcoin Enjin. Enjin plans to use NFTs to promote sustainability and equality as a member of the United Nations Pact. So Enjin is teaming up with the UN to make the world more sustainable. The United Nations Global Compact, which is a non-binding pact aimed at encouraging businesses to adopt sustainable, socially responsible policies, has accepted non-fungible token NFT and blockchain gaming platform Enjin as a participant. But the big question is now, how are they going to use NFTs to make the world more sustainable? Well, Enjin announced on Tuesday that it would be exploring ways to use NFTs to promote sustainability and equality as part of the UN Pact. The company suggested using NFT technology to fight climate change by employing it in carbon capture companies and reducing the global wealth gap by allowing creators around the world permissionless access to NFT markets. Okay, quite a big undertaking for Enjin, but good on them for at least trying, and also for getting in the room now, being at the same table with all these other UN members talking about how to help sustainability globally. Next piece of big news for cryptocurrency, Circle, the company behind USDC, the stablecoin, has just revealed which assets back the USDC stablecoin. And newsflash, it's only 61% backed by cash. So USDC was just audited by major accounting firm, auditing firm, Grant Thornton, highly respected in finance in general. And I pulled this for you and I tweeted this out last night. As of July 2021, 61% of USDC is backed by cash and cash equivalents. That means cash and money market funds. 13% by Yankee certificates of deposits. That means CDs, which are issued by non-US foreign banks, 12% by US Treasuries, 9% by commercial paper. This would be the most risky in my opinion, and 5% by corporate and municipal bonds. So it's not 100% backed by US dollars. It's backed by a basket of financial products and US dollars. That's the video. My name's Austin. Like always, see you tomorrow.